I would say Nigeria's insurance industry has reached a significant milestone with revenue surpassing 1 trillion naira for the first time in 2024. According to latest report by Gusto and Co., the sector's growth was fueled by aggressive marketing premium adjustments due to inflation and a 40.9% naira depreciation. Well, to help us expand more on this right now, we have joining us via Zoom, Mr. Yokle Olubumi is a head financial institution ratings at Augusto and Co. It's great to have you on the show. Happy New Week.
Good afternoon, Laddie. Good to
So,
be here.
your report there, you mentioned this growth there, 1 trillion in revenue. That's for the insurance industry. You say it's driven by aggressive marketing, and it's also due to inflation, definitely, and currency depreciation. What else do you think drove this growth, and is this sustainable?
Yes, to a large extent, because first of all, you need to realize that the insurance industry products are IT cyclical, meaning that when you are having an economic downturn, that is actually when you need the insurance. That's when you should be aggressive for you to even be getting insurance policies. So although you're saying that there's a macroeconomic downturn, right? You will see that the industry will even still reach, will still even be able to generate income. And also, something that we've seen in the last couple of months is that the regulator is partnering with various agencies to drive enforcement of the compulsory insurance from the third-party motor insurance to the one that has to do with the building, the public building act, all those ones. Those ones are also helping to sustain the growth of the insurance revenue in the near term.
And talking about inflation and what we've seen with currency depreciation, um, 2025 we're seeing some kind of stability, with the currency at this point. So does it mean that we might not see that much revenue growth in 2025?
Yeah. Now, I agree with you that in the last couple of years, right, the foreign currency denominated policies like those in the oil and gas, right, in aviation, right, a lot of them saw an upsurge, right? The revenue were bloated in naira terms because of the currency devaluation. However, if you are looking at 2025, you agree with me that the macroeconomic terrain is relatively better compared to what you have in all those 2 years. So although in terms of the growth, right, you might say that, oh, they are not bloated, but you notice that there are more people, more companies that are able to even pay the premiums. And also, don't forget that there are also some other line of businesses that are denominated in naira. For example, what I mentioned about the enforcement, that will significantly drive the motor business, which accounted for about 12% of the industry's insurance revenue in 2024, right? There are other areas, right? As the purchasing power of consumers are actually even improving, we expect inflation to moderate a bit in 2025. That will also help more customers, more clients, more people to take up insurance policies.
Right. I'm talking about picking up car insurance policies. We see, with the currency devaluation, cars have gotten really expensive right now. And I do hear some people saying, please hold on to the car you have now because of the cost of cars. So that would definitely impact, most of the insurance people buy.
Yes, it's going to help the insurance companies, right? Because one thing that a lot of them did last year is to try and even encourage more clients to even take up, particularly the comprehensive insurance policies. And what we saw, although the increase was in 20, the increase in the motor policy was in 2023, right? In 2024, more people are taking on it, right? And what they are doing now is even to educate people that look, although you might think the premium is expensive, but if you look at it, that if something happens to your cars, you notice that the cost of fixing it and even the cost of getting another car is very prohibitive. So you see that in the long run, it might even be cheaper for you to even get your insurance, to have a motor insurance. And what we are seeing also is that the industry is also responding based on the relatively large size of the premium that needs to be paid on cars, right? introducing some flexible products that allow you to even either pay instrumentally or even to allow you to even, instead of saying that you have a full comprehensive insurance, you can pick and choose what you want to cover, right? You might say that you don't want to cover fire, you want. So by even choosing the bouquet of what you want to be insured, you notice that you have a comprehensive insurance that even is customized and even bespoke to your specific need as a client.
All right. So also, we're seeing reforms coming for the insurance industry too, and talking about the insurance reform bill, if passed, how do you think this will impact the industry, going forward?
Okay. I think the Nigerian insurance industry reform bill is meant to change the face of regulation in Nigeria. Prior to now, we have various legislations that were used to even regulate activities in the insurance industry. For instance, we have the Insurance Act 2003, we have the Maritime Insurance Act 2004, we have the Motor Vehicle Third Party Insurance Act 2004, we have the National Insurance Commission of Nigeria Act 2004, and we also have the Nigerian Reinsurance Corporation Act 2004. So the aim of the ongoing reform that we are seeing in the industry is to try and even consolidate all of these into one legislation. And even also, the plan is to also even update this legislation. Like you see, a lot of them are even, like say, all of them are even more than 2 decades old, and there is actually even need to reform them. I think the legislation is also aims to empower and strengthen RICON in overseeing that industry, right? In terms of stating clearly the power of Nikon to cancel the license of insurers, the conditions under which that cancellation can be done, and also reviewing upward the penalties of defaulting insurance. And of course, definitely, what we've seen also is that that act is going to revolutionize the capitalization and how we go about the capitalization of insurance companies.
And do you think the reforms, if passed, do you think they'll make regulations stricter for that industry?
I think we need to be careful how do we use the word stricter, right? What we'll see is that because, for instance, now let me give you an example. I think a few years ago, Nikon withdrew the operating license of an insurance company, and they took Nikon to court. Apparently, they actually won that particular case, right? So because there are some lacuna in the existing legislation. So what we have now is empowering Nikon to be able to do what they are meant to do. Because what we are seeing in the insurance industry, there are a lot of cleanups, a lot of the cleanup activities that Nikon needs to do. So what this act is going to do is to empower Nikon to be able to even implement those particular changes that are needed for them to embark on the reform that are needed to even be able to even structure the industry and make things to be working effectively in the industry.
All right, you did mention recapitalization. That's expected to bring in about 600 billion naira. How do you think this will reshape, competition and underwriting capacity in the sector?
Okay, because the last time we had a review of the recapitalization of the industry was in 2003, right? And even then, right, the minimum capital for life was 2 billion, for non-life 3 billion, and then for reinsurance was 10 billion, and for composite was 5 billion, right? You agree with me that if you convert that one to dollars, you notice that that is very, very small compared to now. And that has significantly impacted the ability of the insurance companies to even underwrite risk. So what you see is that some big ticket or complex transaction, the insurance company just basically serve as agents because as they're taking those risks, a lot of them are being seeded out because they can't even undertake and retain them. But with the planned recapitalization, is meant to even increase the capacity of the insurance to be able to underwrite risk and even retain a lot of it. Now, based on the bill, the plan is to raise the minimum capital for life companies from 2 billion to 15 billion, that of non-life from 3 billion to 25 billion, and that of reinsurance company from 10 billion to 35 billion. Of course, definitely that will increase the ability of the insurance company to take on more risk. And most importantly, we will realize that insurance company now will be under pressure to be able to deliver return to the shareholders, because it's not only for you to have those funds, you have to deliver returns to them. And we think that that will also increase the competition in the industry, right? Is to compel the insurance to improve their offerings, to become more customer-centric, to see how we can even increase penetration with the ultimate aim of improving profitability and satisfying the shareholders.
Now we know, technological adoption is cited as a growth driver. What innovations, like take for example, insurtech, digital distribution. What innovations do you think could accelerate insurance penetration in Nigeria? Because that's still lagging, going by what we're seeing.
I agree with you. And I think there's even a school of thought that believe that one of the reasons why we have very low insurance penetration in Nigeria is because technology adoption is still relatively low in the industry. And I think the good part is that I think the industry realized that, look, there's no way you can scale up. There's no way you can drive growth without adopting technology. And I think currently almost all insurance companies have one or two technology or digital projects, right, that has been ongoing to be able to ensure that we have business efficiency. So in the near term, right, based on what is going on now, would it be believe in the next 1 or 2 years, we're going to see the impact, right? In terms of business generation, in terms of distributing products, even in terms of even managing claims, right? Customer service, and even overall ensuring that you have an efficient organization. And like you also mentioned, yes, the insurtech will going to be very instructive in even ensuring that we also even have a lot of technology adoption in the industry. And we also have the web application regulation that became effective last year. That will also ensure that you have more technology adoption in the industry. Luckily, we all know that technology adoption is not cheap, that this recapitalization exercise will provide the needed resources that are meant to drive this technological revolution in the industry.
And we also have a school of thought saying that, rising claim costs and stricter IFRS 17 standards may force insurers to, prioritize profitable policies. Will this lead to maybe higher premiums or reduced coverage for consumers?
Yeah, I think, like I mentioned earlier, one of the reasons why insurance company needed to raise the premium last year is because of one, IFRS 17, and also because some businesses were onerous, were already even non-profit making. And what we've seen also is that, look, right, a lot of insurance companies, they are focusing now on profitability because based on IFRS 17 standard, from the outset of the transaction, you need to check if it's profitable or not. If it's not profitable, you need to expense the loss from the outset. So there's no point for you even underwriting a policy when you notice that, look, it's going to impact your profitability from the outset. So you see that a lot of customers, a lot of insurance companies are focusing on profitability of transaction. Having said that, what we've seen insurance companies trying to do is to create flexibility on some of their products. So meaning that I'm not saying that, oh, just come on, like I mentioned earlier, I'm not saying that if you just take comprehensive insurance, you can actually even take those that you want to even underwrite, right? Here are the ones that the risk that you think you don't need to actually cover, you might not even remove it. You might not even have a policy that covers it. And what we are also saying also is that some insurers are also trying to even engage customers, educate them more that, look, although you might think the premium is high, but in the long run, you are better off for it because if you have a loss, the impact is going to be significant. Having said that, yes, we've seen some level of under-insurance in Nigeria in which some clients are reducing the sum assured. But what some insurance companies are trying to do is to increase education, educate the clients, and even probably discuss the appropriate payment structure to ensure that their risks are covered.
Right. I know most times customers run away from, comprehensive insurance when it comes to the cars and all of that. There's still that debate, about comprehensive and the third-party insurance. Maybe we have to get more creative, with the comprehensive to make it more attractive, going forward. But thank you so much. That was Mr. Ayokule Olubumi, is the head financial institution ratings at Gusto & Co. Thank you for coming on today.
Thank you very much. Thank you for having me.